Let's welcome on board our fundamental experts as well. Hemant Shah, fund manager from Seven Islands PMS, as well as Sanjiv Bhasin, as always, joins us on the show. Mr. Bhasin, let me start by asking you, it's the last 1 hour before you can probably take some positions if you want to ahead of the exit polls. Any strategy you would want to recommend?
Yeah, so Anisha, I think staying invested is the best strategy because we thought that this correction was much overdue in the sense pessimism and rumor mongering on fate of the results that will only be unfolded on the morning of Tuesday. And I think that it's very healthy for the market that we've seen a 500-point correction. We were of the view that before June 4th, but I am very strong that we go and test those new highs on the 4th itself, that is 23,300. Simple reason, I think, even though the same numbers will not come as last time, but you will get the clear majority, and that will be enough for the market. The undertone remains strong as far as PSUs, as far as results, as far as macros. Oil is on a weak wicket, bonds are falling, and I think Indian demographics are playing excellent. So if you have been waiting for an opportunity, then opportunity will only come with the fear. And I think this is a very good time to nibble into good stocks. We have turned very positive on some of the insurance plays. They act as good defensives. There is good gross net value additions and so on. So LIC, ICICI Pru, but our top picks are SBI Life and HDFC Life. We think insurance, there is all rumor mongering on the IRDA. There is going to be no such change on surrender value. And the gross net value additions in the masses as insurance is a very strong play. And you cannot get such pedigree stocks languishing. So those are some of our themes. We are also bullish on banks. And as you know, HDFC Bank has been an outperformer. And Anisha, today again, there is circuit on Ratan Power at 1925. So more than 120% return there. And that's telling you that there is humongous amount of opportunity in select mid and small cap where restructuring and the asset allocation has played out brilliantly.
Absolutely, another 5% higher on that stock as well as we speak right now. But since we were talking about insurers, IRDAI is likely to come up with a new commission structure in life insurance. They may announce the new structure as early as the month of June itself. In fact, my colleague Anurag Shah is here with more details on what he's picking up from his sources.
Insurance regulator IRDAI is likely to come up with a new commission structure in life insurance industry, and as per our sources, life insurance companies have submitted their suggestions to regulator, and in month of June IRDAI is likely to introduce leveling commission structure against the presently prevailing structure of high upfront commission. So the new structure will help life insurance sector to increase their persistency also, because agent will get a commission for more number of years. So upfront commission will reduce, but trailing commission will increase. Other than that, the front loading cost of life insurance industry will reduce. That will also result in a better surrender value for policy holders. There is again a feedback has been given from life insurance industry to increase the special surrender value. We may see that going ahead. Again, the IRDAI may go back to the December 2023 draft where they have suggested a higher surrender value. So there is a link between these two also. So upfront commission will reduce and trailing commission will increase for more number of years. So a couple of suggestions has been given by insurance companies to regulator. So going ahead in month of June, as per our sources, IRDAI is likely to come up with a new commission structure for the life insurance industry.
Okay, thanks Anurag for that. Let's welcome on board Hemant Shah as well. Hemant, hi, good to be speaking with you. We have been polling a whole host of market experts on our shows, and they believe that the market hasn't made the top yet, and the themes which have worked so far, which is your infrastructure, PSUs, capital goods, defense, is likely to continue. And in fact, that's the brokerage consensus as well right now, that BJP is coming back to power, and just stick to the themes which are working out well. What's your market outlook right now?
Thank you for having me on this show. Yes, we have also the same view. We are absolutely positive taking advantage of this fall also in terms of bit of buying. We also started buying in our fund also. And I echo the same view as Sanjay ji shared. We are absolutely positive on capital goods. The macros are in our favor. The result season has been, in fact, very much encouraging. Q4 usually is a strong quarter for infrastructure and capital goods companies, but this time there are many surprises than many misses rather. In fact, one observation in terms of the results that multinational companies have posted amazingly strong numbers. I mean, if you observe the capital goods sector, say for example, bearings, or for example, even for example, a few multinational large MNC chemical companies have also posted good results. Most of the chemical multinational companies have posted better than expected results actually. So this sector is cap goods, defense, manufacturing per se. We are very positive.
Sanjay, what is your strategy? Would you say that one would have to sort of tactically change your portfolio stance, ease off from the PSUs, increase your allocation to large caps? Or would you say keep doing more of the same? What was working earlier will work even later if the current regime were to continue?
Well, if the current regime continues, anything with Hindustan or Bharat, you have to buy those stocks because they will go again back to now. But we are of the view PSUs may have fully priced in defense, railways, the next 3 years of capex. We are very, very optimistic on the private side. The banks, HDFC, ICICI, the insurance companies, SBI Life, HDFC Life, and some of the technology names. We think Wipro, ITC, Infi, and we are also bullish on the mid caps, particularly in stocks like India Bull Real Estate, and why not Vodafone, which is back and running as the not 2.5 but as a third player. And I think price hikes, volume growth, and going into 5G on the capex side is going to reinforce business. So stock specific, pick up your good portfolio, but I think the underperformance of the private sector will now come to the shore. And if the markets do correct, these will also stand out as defensive, particularly insurance. So we have got a bit of insurance in the sense we are insuring our portfolio, but we also think that select PSUs will do outperformance over a period of time.
You can still hold on to, but it's time now for the private players to actually participate. Let me just put the spotlight on some of the stocks. PTC Industries, for instance, is up around 10%. Antique actually initiated coverage on the counter, not PTC India. PTC Industries is the stock I'm talking about because that stock was higher by 10 to 11% the last time I checked. That's because Antique had initiated coverage with a buy stance and a target price which was over 67% from yesterday's closing. Welspun Corp down 7-8% after revenue missed street expectations, and even the profitability was subpar. Zomato is down 3-4%, though it's kind of recouped most of its losses, so down about 2%. But Macquarie believes that the rising competition from JioMart might just impede growth there, while Titan continues to glitter. There was that analyst day today. They're eyeing almost 2,000 crore revenue from eye care. Jewelry business is expected to grow at 15 to 20% with a 10 to 11% market share. So that's the latest coming in as far as some of these stocks are concerned. But Hemant, if I had to put the spotlight specifically on Zomato and some of these new age tech companies, what would be your recommendation now? Because yes, they had disrupted the market, but Street already seems to be penciling in the best. Look at Zomato, 180 on the price.
Yes, we were very positive on Zomato. I mean, just a year back, we had invested in our fund also, but I must say that we have exited, and on the expectation that there will be tremendous competition going forward. I think one of the second player is also eyeing the market and ready to list on the exchanges. And the ONDC part, I think that is also growing in a big way, which will have some part of the competition for Zomato. And that is the only reason we have exited. But having said that, there are few other technology companies actually. See, for example, Zaggle. It's a very niche segment they are into. I mean, those kind of niche segment, we are really positive still. The potential is immense. The market is big. So we need to have such kind of player to garner the market share and having first mover advantage.
Hemant, stay with us. Lots more to discuss. Sanjiv, you too, but we'll do that after this very quick break. Getting choppy out there, at least for the indexes. But yes, individual names, they continue to hold out, especially the Adani group of names. But all eyes also on Motown. They'll be declaring their May auto sales numbers. So let me take it across to Shrishti, find out what the street is penciling in.
When we talk about the auto sales data for the month of May, we have to take note that in the month of May, there were no major push from the marriage season, no festivity around. Other than that, there were the heat waves around the country. So that impacted the footfalls, and also some of the rains in some of the select parts of the country actually dampened the agri segment. So all of this could trickle in, meaning that we are not entering, or we are not expecting much of an optimism from the month of May. And the big trends that we are watching out for was on your screen. For two-wheelers, the retail momentum is largely expected to be sustained. The passenger vehicles demand discount expected to be stable month on month. From the commercial vehicle segment, the low base is expected to lend the support. Now, when we talk about the company-specific expectation from the passenger vehicle segment, the key to watch will be actually M&M, because everybody is highlighting that the new offering of M&M is actually getting a lot of excitement from the footfall as well. But other than that, because of the heat wave conditions, the footfall of some of the other companies actually got impacted. So M&M will be the key to watch. This time we are expecting 72,633 units from their automotive division. Coming to the commercial vehicle segment, herein Eicher Motors as well as Tata Motors is expected to post a growth of 2 to 15% on a sequential basis, but that will be on a back of a decent base. But do watch out for Ashok Leyland, because the company management was quite optimistic, and they did say that because of the elections, they are not seeing any impact on the sales. April month was pretty well. For May month, they were also sounding positive. So 14,633 units is what we are expecting from Ashok Leyland. From the two-wheeler segment, this could actually be the key segment to watch out for, because from all the other segments, this segment could actually flare better. From Bajaj Auto, TVS Motors, Eicher Motors, though we are expecting a flattish sort of a growth on a month-on-month basis, but do watch out for Eicher Motors, because this time we are expecting the sales to be 82,233 units. So let's watch out how the numbers pan out. But apart from that, even the exports are expected to flare better. And lastly, from the tractor division, we are not expecting much, though there could once again be a decline, because like I mentioned, that because of this rains in some of the select part of the countries, especially in the state of Maharashtra, that dampened the agri segment, and that could actually impact the numbers as well. From M&M tractors, we are expecting a decline of 12% on a month-on-month basis, but because for escorts, on a back of a low base, 8,560 units is what we are expecting, and that could lead to a jump of 14% on a month-on-month basis. So those are the expectations. We are not expecting a blockbuster set from any of the segments, but definitely two-wheeler will be the key to watch out for.
Okay, thanks, Shrishti, for that. Let me pose that question to Mr. Bhasin then. Sir, what's your expectation from the auto counters now in terms of the alpha generation? Because today Bank of America was very bullish on M&M as well. They upgraded that stock well above 3,000 rupees.
So, Anisha, our topic continued to be Maruti. Ashok Leyland, which has been a darling of a stock all the way from 150 and now new numbers. Ashok Leyland, I think, is headed to 300. And lastly but not least is Bajaj Auto. We still think Bajaj Auto is going to cross that 10,000 mark. So these are the three names we have. Yes, M&M was one of our top picks at that 650, 700. We have tended to book profit there because we think large part of everything is priced in. But the new launches will do well. But we are more bullish on Maruti, Ashok Leyland and Bajaj. And in the OEM, Motherson Sumi, we think that is another stock which can be re-rated.
Okay, so that was about some of these auto counters which are in focus. And in fact, since we're talking about auto, we did speak with the management of Landmark. They are talking about the kind of growth the industry is expected to really play out. SUVs has been a big trend and it has played out. And now, in fact, NSE is coming out with an electric vehicle index as well, telling you the entire transition that is happening and which players are perhaps likely to ace that game. In fact, listen into a slice of that conversation.
We all know that the luxury car penetration in India is pretty low, and we are at a takeoff stage. So the luxury market grew twice the pace of the passenger car market. And the belief is that that phenomenon is likely to continue for a long time to come. We have an election year. We have a high base. Notwithstanding that, I believe that the growth, multi-year growth, is here to stay.
Right, okay, that's the take coming in from Landmark Cars and what we're anticipating from the market per se. But cap goods, let's just see where, those players are. L&T, of course, has really been on a tear off late, and today as well, it's been a strong one. But what about the entire MNC pack? That rally kind of stalled, but let's revisit the likes of an ABB, Siemens, etc., and see where those stocks are currently. They will just come up for you on your screens, a little bit muted in trade right now. Kunal, L&T still the strongest of the lot, or are there any smaller plays that you would recommend?
From the cap good space?
Yeah.
No, I think L&T is something which is more formidable and far more stable at current levels. In the last 3 weeks also, the stock has done reasonably well from 3,200 mark towards I think 3,700, 3,750 with the stock tested this week. I think it's been doing exceptionally well. So I think even at current levels, it looks very strong compared to the likes of ABB, Siemens, etc. This stock had relatively underperformed in the last 2-3 months or so. So I believe that even if there's a catch-up play for the stock, I would expect that it should at least retest the levels of 3,800, 3,850 mark, which is the previous high.
Okay, point taken. Hemant, since we have you with us, I also wanted your view regarding the Adani group of stocks. Interestingly, Jefferies came out with a note this morning saying that the entire group's EBITDA growth has been 40%, the leverage ratios have improved, and they listed out for each of the company as to what are the key drivers. What within the Adani group would you pick?
I think the only pick in the Adani group we can pick is the Adani Ports. So basically, Adani Group is the market trader's delight, I would say. It's a momentum play rather than anything else, but we genuinely believe in the fundamental story of Adani Port.
Now, but since you're calling it a trader favorite, let me toss it to Aditya. Not really a trader, but at least from the chartist point of view, what would you recommend, Aditya, within the Adani Group for a quick money sort of trade on Adani Group?
So I recommended Adani Enterprise just few hours back on Etina Swadesh also, and I think the trend is still positive, and this is one of the stock which could show very high beta moves given the election results. So I think one can buy even right now at 3395, and this stock is expected to break 52-week high, which is placed at the recent swing high, which is placed at 3455. And that would be the first target, and second target would be 3,700, and one must maintain stop loss at 3,200.
Okay, that's some of the Adani group of names which are looking fairly active today. Where is the entire pharma rally? It began nicely start of the week, and in fact, the last fortnight or so. Today, of course, Ipca Labs is down about 7.5%. But what about Divi's? That's also actually lower, 1.7%. Want to see what Sun Pharma is up to, what DRL is doing then. And some of the MNC pharma names also should come up for you on your screens. Fizzled out quite soon, Kunal, or is that not a trend right now? You think they will come back, pharma names?
No, I think it's a risk of across the board for the index. It's not as if that the defensive sectors like FMCG and pharma are getting shielded. I think it's profit booking across the spectrum which we're seeing, whether it's high risk sectors, whether it's low risk or low beta sectors. So I believe that once the dust settles out and once the event is out of the way, I would believe that the pharma stocks, the FMCG names should make a strong comeback. As it is, I think many of the charts from the individual spaces, specifically for pharma, I think they were showing a lot of strong bullish momentum for themselves. So whether it's the likes of Lupin, Glenmark Pharma, which had made a new high, Zydus Life, etc., Aurobindo Pharma, I think all of these stocks should make a strong comeback.
So on that note, actually, we'll do one thing. We'll slip into a very short break. Thanks, Hemant, as well as Sanjiv for making time and speaking with us today. But as we slip into a very short break, listening to the commentary coming in from Standards & Poor's, that is the S&P, they of course had revised the overall outlook for India. The rating was still BBB minus, but the outlook had improved from stable to positive. Listen into that soundbite as we slip into this very short break.
Believe that Indian banks will maintain strong financial performance over the next 12 to 24 months. In fact, in the base case, we do believe that the banks are more likely to slow down their credit growth to about 14%. In that situation, deposits will still continue to lag the credit growth, but the competition for deposits will be manageable. And in that situation, we do expect only a 10 basis margin impact.
Over the past 2 years, despite the global macroeconomic shock to supply, India's inflation rate never went above 7.8%. So I think that's really credit to the RBI for acting on time and managing this inflation rate expectation quite well.
If you like this video, then like, share and subscribe to ET Now.